For we are live. This is Senate Finance, and we're back to work after live we've been on the floor. And we're going to start today with our walkthrough of S 135 and activating credit card fees and requiring the acceptance of cash. So, Rick, can you kind of walk us through this?
Be glad to. And I can pull up the electronic copy. I also just have paper copy. Madam Chair, I may start with paper copy. Unless you prefer.
I think if you pull it up, then everyone can see it. If you
Sure.
do that.
Sure. Okay. So I'll start talking as I type. S 135, there's two sections in this bill. They're not really related. They both deal in the financial sector. But I'll explain them separately. And I think what I'll do, Madam Chair, is I will kind of walk through the bill, then discuss any potential issues, legal issues that I've.
That would be good.
Yeah. Okay. Rick Sable, Office of Legislative Counsel. So this is, like I said, S 135, and these are new statutes that are being proposed. We're not amending anything. There we go. Okay. So we are adding a subchapter to our consumer protection portion in Title IX of our statutes. And kind of an overview, I'll start with that, and we can talk about the actual specifics here, is when a merchant swipes a credit card for a good service restaurant, as you all probably most know, that swipe includes swipe fees, interchange fees, and those vary 2.9%, 3%, right? And the merchant usually eats those fees. Sometimes they can add it to the cost of their doing business, but that is a fee provided to banks for the cost of doing business, fraud protection, other things that credit cards offer consumers as part of the services. So what this bill would do is kind of sector out taxes and gratuities from those interchange fees. So a merchant, let's say a restaurant, you pay the bill, they swipe your credit card. The system, you would type in the amount, total amount, and then part of that total would include taxes and gratuities. That total would be exempted from the interchange fee. So if your total was, let's say, $50, but 10 of those dollars, make it even, 10 of the dollars were taxes and gratuity, that $10 will not be part of the interchange fee calculation. Does that make sense? Yeah, okay. That's the intent of the bill. I'll walk through the language, but that's kind of what the bill intends to do, is not charge merchants interchange fee on those two specific things, gratuities and taxes. Okay, so we have the prohibition on fees. We have several definitions. We define an acquirer bank, which is a member of the payment card network that contracts with a merchant either directly or indirectly through a processor for the settlement of electronic payment transactions. A transaction means a transaction in which a person uses a debit card, credit card, or other payment code or device issued or approved through a payment card network to debit a deposit account or use a line of credit. Gratuity means voluntary monetary contribution received by a merchant from a guest patron of the customer for services rendered. And it also includes an automatic service fee received by a merchant from a guest, patron, or customer for services rendered that is intended to replace the need for a voluntary monetary contribution. You may see sometimes restaurants specifically have gratuity included if it's a large number of people, or it's up to the merchant to determine.
It would also include things like resort fees at hotels.
Not necessarily.
Not necessarily.
We need to talk about that.
Yeah.
Well, they would be included as merchants, let me make that clear.
Yeah.
But if they're separate fees, resort fees, I don't know, if those would be included in this.
Okay.
We would need to talk about that.
I assume right now they're included in your bill, and if you pay your bill,
So if a resort fee is considered a tax, and we don't have tax defined here, so we would probably want to talk about that and see what the committee wants to do.
okay.
Okay, interchange fee means a fee established, charged, or received by a payment card network for the purpose of compensating the issuer for its involvement in an electronic payment transaction. Issuer is a person that issues a debit card or credit card. Merchant is a person that collects and remits tax. Pretty broad. It's anybody that does that. Could be an individual, could be a business, could be any of those. Payment card network means an entity that directly or through licensed members, processors, or agents provides the services, infrastructure, and software that route information and data to facilitate transaction authorizations, clearance, and settlement, and that merchants are required to access in order to accept a specific brand of general purpose credit cards, charge cards, debit cards, or stored value cards as payments for goods and services. A processor is a entity that facilitates services, processes, or manages a debit card or credit card authorization, billing, transfer, payment procedures for settlement with respect to a electronic payment transaction. So there are a lot of entities involved when you pay for something with a credit card. There's a lot that happens behind the scenes that I can't tell you about. I'm sure you have witnesses.
I'm not sure I want to know
right?
about it.
No, it's not the UCC. Well, it's a commercial transaction, but UCC.
Yeah. Shall I tell you about that, Rick?
Are you, because there's so many players involved in these transactions, again, we want to make sure they're all defined. And it's, we can discuss whether or not these definitions are appropriate. So the requirements with respect to transactions involving a merchant and subject to some restrictions that I'll talk about here in a second. No issuer, payment card network, acquirer, bank, or processor shall charge or collect from a merchant an interchange fee on the amount of the transaction that is a tax or gratuity. Again, tax is not defined. When I drafted it, I figured we know what taxes are, but we may need to be more specific on if that includes resort fees or other types of taxes. We do have gratuity defined in the bill.
The common understanding is that tax is something applied by the government.
Right. So, 2A, a merchant shall transmit the amount of a transaction that is a tax and gratuity to the acquirer, bank, payment card network, issuer, or any designee of the foregoing as part of the transaction's authorization or settlement process. This is kind of the practical aspect, right? When you submit this transaction, there needs to be a way for the merchant to tell these entities that this is the portion of the amount that is gratuity and tax. So it is the merchant's job to do that, to submit that information that is not tax and gratuity, or that includes, this is the separate amounts that are not included in the interchange fee.
I'm having trouble visualizing how that would happen, but
Right. I can't opine on that. It'd be complicated. I don't know. I don't know how easy it is to do that. It would be a point of sale system that would, right, hopefully allow the merchant to do that easily. Hopefully. Subdivision B, an acquirer, bank, payment card network, issuer, or any designee that does not receive from a merchant the amount of a transaction that is tax and gratuity as part of the transaction, as I just talked about in 2A, may charge the merchant an interchange fee on the entire transaction. So the merchant cannot communicate that this portion is tax and gratuity. The banks can charge the interchange fee on the entire transaction amount. However, a merchant that does not transmit the amount of the transaction, so they don't do it or they can do it, may submit tax documentation showing the tax and gratuity amount of the transaction to the acquirer, bank, or its designee not later than 180 days after the transaction. So this gives them roughly 6 months to send this documentation, like, hey, this is how much of our transactions were tax and gratuity. D, a acquirer, bank, network, issuer, or any designee that receives this documentation not later than 30 days after receiving it shall credit the merchant for the amount in interchange fees that were collected on the tax and gratuity amount. So once they receive that documentation, they have 30 days to reimburse the merchant for the amount that should have been if they had submitted that information initially. Follow me so far?
Okay.
Yeah. Yeah, it's just confusing though, because you're spending that money has to be transmitted. So then why would you credit back that portion of the fee back to the merchant, even though you transmitted that amount of money, which your fee is based on?
I'm trying
Like
to
the acts or gratuity
Right,
portion of
right.
it.
So the merchant, in this situation where the merchant did not initially submit, like, let's say that the bill was $50, right?
Yeah.
And they did not clarify of that 50, how much was tax gratuity, right? So they were charged on that 50, they were charged the entire 2.9%, let's say, okay? Then a month later, they submit, actually, company, this $50, 10 of those dollars were gratuity and taxes. So then they would, if the bank received that documentation, they would have to credit the merchant for that interchange fee that was charged on that $10. That should not have been charged. If they had originally been told about that.
Okay, except gratuities generally get charged at a service establishment. If it is a tipping establishment, they may pay below the minimum wage and your tips are considered to make up that difference. Because if your tips don't equal minimum
Right.
wage, then the merchant has to make up the difference. So you would, in fact, part of that gratuity could be your wages that you're supposed to pay. And if I put my payroll on my credit card, I pay the fee, right? It would be an extremely unwise thing to do. But
If you paid your employees using a credit card,
yeah,
um,
I would.
that might be outside the scope of what this bill
Yeah,
is
I mean, I'm
intending
just-
to do, but
It just is sounding like there's a lot of judgment area in here. Okay,
so there's a little bit of clarification here because that, they could be that the corrected amount. So again, the merchant does not tell the bank what the amount of transaction is tax and gratuity, right? They don't do that. But then they submit tax documentation within 180 days. It could be that corrected amount is greater or less than what it should have been. So if it's greater than what was reported by the merchant, the acquirer bank or in the following shall credit the merchant the difference in interchange fees between the amount originally reported by the merchant and the corrected amount subsequently reported by the merchant. So I think that's the probably more common issue, right? Is the merchant either didn't report an amount at all, or they missed it for whatever reason. Maybe they missed the number on the receipt that the customer left. Anyway, they would be able to have that credited. If it's less than what was reported, the merchant shall credit the bank or any of the foregoing in interchange fees between the amount originally reported by the merchant and the corrected amount. So, for example, if the merchant initially said, "Hey, out of this $12 out of the 50 is tax gratuity," but then they did their reconciliation and they realized, "Oh, it's only $10." So then they would have to credit the merchant for that extra $2. Yeah. Subdivision 4, it shall be unlawful for an issuer, payment card network, acquirer, bank, or processor to alter or manipulate an interchange fee of a transaction in an effort to circumvent the effects of the section. In other words, we don't want the banks to find other ways to get that 2.9% from the tax gratuities by doing something else that's unrelated to this. Penalties. The following penalties shall apply to violations of the subchapter. Any issuer, payment card network, bank, or processor found to have violated the section shall be liable for a civil penalty of $1,000 per transaction. Any merchant whose rights under the subchapter have been violated may maintain a civil action for damages or equitable relief, including attorney's fees. 3, a violation of the section shall be deemed a violation of the Consumer Protection Act 2453, which gives the Attorney General the ability to institute its own enforcement or
it's
investigation.
also a right of private action.
Correct. Okay, so the next section's a different part of the bill. So I'll stop here and ask if there's any questions.
Sorry, so you have a $50 bill, 10 of that is taxes and gratuity. This bill wants to make it so it's free for the credit card company or whoever is moving that money with your card. They want to make that free.
That's so free, that portion, that $10, right, that the merchant would not pay, the interchange fee percentage, whatever it is, would not be applied to that $10.
Okay.
Yeah.
So if I was a restaurant and I wanted to cut down on my credit card fees,
Right.
I would make my menu items very low, but my gratuity very high.
Sure. Okay.
Yeah.
Hypothetically, yes.
People would.
Because there's a cost associated to move that tax and gratuity using your credit card. So I'm just curious as to why this might be an answer or from the presenter.
No one is required to offer credit card services, right?
Right.
You can do cash on. Actually, I think.
That was good, great segue, Madam Chair.
Yeah.
This is like-
Second half, and then we're gonna give to the witnesses.
We rehearsed it several times.
And then,
You pulled it off so well. So we do, if I may, the second part of the bill, this was introduced last year as well. I don't think I got taken
I
up,
think
but,
it went through economic development.
on that,
We took it.
Yes,
up
you
in
took it up, but
economic development.
it didn't, yeah, it didn't
It
get
did
passed.
not,
Yeah.
it did not pass.
Yes,
Okay.
yes, I'm sorry, I think it didn't walk through it. It's the exact same language, except I think it went from 1,000 to 500, can't remember anyway. So this is a very, very simple, language, but it's may have some implications that are bigger than the language. A seller or lessor or offers goods or services, basically a merchant, shall not refuse to accept cash as a method of payment unless the transaction exceeds $500. A person who violates this, again, violates the Consumer Protection Act, which brings in the Attorney General and yes, the private right of action. So again, I think it's pretty obvious, but I can answer questions. It would require a business to accept cash unless it's over $500.
And the testimony we took last year arose out of a substation, transfer station, which was out in the boonies, and they did not want their employee, they weren't sure they could get an employee to sit out in this kind of lonely space on Saturday morning and be collecting large amounts of cash. And we also heard from store owners, mostly convenience store owners, that didn't want to have clerks left with a significant amount of cash in the drawer after midnight, given the propensity for those places to be subject to robbery. But the countermanding argument was employee safety. And we won't hear from those people again. I thought we had worked out solution last year.
There was, my recollection, there was some exceptions added to this.
Yeah,
Like you had, I can pull it up at some point, but there was a list of some exemptions that like parking garage,
that's, yeah,
attendance,
that's
so
right.
some of these things that are, there's no person there.
I've been through toll booths like that.
Right,
Call us and send us $1.25. Because we're not paying, we don't have someone to cover the toll booth. So, yeah. Okay. Okay,
so I was gonna going back to the previous section, just a few, so the credit card interchange fee, Illinois passed this last 2024. And it was going to take effect July 1st of this year. There is a federal court in Illinois that's currently holding the bill up as an injunction. There is some federal law preemption that is concerning the court, the National Banking Association, the National Banking Act. It's not this positive, but it is almost the same exact bill. So You know, I would want to at some point discuss that potential complication that the bill would have. Yeah.
But Illinois is being held up in a court action. All right.
Because of just federal law preempting
I would wonder about interstate commerce.
the dormant commerce clause was also one, but the clear answer was the NBA was already kind of regulating this area as far as national banks are concerned and out-of-state banks, and they were worried that you know, federal law is already kind of regulating this area, and while states do have some leeway, that specific judge believed that it was preempted by the federal law.
Okay.
Yeah.
And there are federally chartered banks and state chartered banks.
And you can't really apply it just to certain banks, and that's the problem that the court has. You can't really roll this out. If certain banks have to do it, other banks don't do it, that becomes complicated.
Okay. Any questions for Rick? We're gonna hear our witnesses.
I get the easy books, you know.
Yes. No, you're not doing education.
Are we hearing from witnesses today? Or
I have Joe Bergeron on. Scott Talbot was going to, but he canceled. We're late. And then
I
we'll hear more witnesses.
I have, if we continue to work on the bill, I have a constituent who might want to testify.
Okay. I'm trying, I know there's a local merchant in Montpelier. I'm trying to find out who it is and give them a chance to testify.
Oh, mine is in Huntington.
But we will. Okay. Any questions, Rick, at this point, Clark? All right, if not, then Joe Bergeron. Joe,
Madam Chair?
bankers want to talk today?
Not today, madam.
Not today.
The credit unions, my partners, are gonna,
Oh, your partners today.
we like each other.
Oh, today you like each other. This is good.
That's what you know, we all chuckle about that. It's been a long running joke in the state house, but my counterpart Chris and I have a lot, 98% in common, 99% plus in common. I think the difference that we have philosophical wise, not, these kinds of issues and whatnot. So just thought I'd discuss that. Joe Bergeron, President, Association of Black Credit Unions. Thank you so much for the opportunity to chat with you. And I will be brief today. I'm not an expert on credit and debit card operations, but I know enough to be able to share some of our initial thoughts about this legislation with you anyway. And as a sidebar, personal sidebar, it helps me take my mind off wanting to look at what my 401k is doing today. If you haven't read it, that's not good.
I've been told this is a good day to buy stocks.
That's part of it. Yeah. Credit unions are, again, I appreciate the opportunity to testify with all of you today. You know, credit unions are financial cooperatives, right? And I just need to get my little plug in. So I always reference that cooperative part every chance I get an opportunity to. Credit unions are financial cooperatives, and about 2/3 of Vermonters are members of at least one credit union in Vermont. So that means, gazing at this room, there's 10 or 12 of us that are members of a credit union. So great. And I'm not going, and I'm a member of a couple of credit unions myself, and I'm not going to get into the weeds on neither credit and debit cards nor on the structure or operations of credit unions or anything, except to say that you know that all of you who are members of a Vermont, whether it's a Vermont or some other credit union, you're the owner of that institution. And so everything that cooperative credit union does, it's under accountability to you as an owner of that institution, which is kind of a de facto stockholder in that institution. And so all of the decision making that happens in a credit union, whether it's in the boardroom or the president's office or whatever it happens to be, is all with that in mind, that they are making decisions based on what is the benefit to our owners, just like most businesses, except in this case, the owners are all the people who do business with the institution. So they take their job of providing, in this instance, credit and debit cards and other vehicles like that very, very seriously, and are very diligent about making sure that they're not gouging consumers in any way and keeping rates and fees as low as possible because it's to the benefit of the institution. So with all of that said, I guess that every one of us in this room has become, maybe there's one exception. Everyone in this room, with the exception of one at most, probably has a number of pieces of plastic in your wallet, purse, pocket, or whatever. And we've become very dependent on those pieces of plastic. A modern day version of that is putting it on your phone, right? But it's still using the same rails, whether it's debit card rails or credit card rails, even if there's not a piece of plastic in your hand.
15.
You have 15?
Different plastic.
I had
Thank
one.
you. You have maybe. So we've become extremely dependent on those and they just work, right? And I think that's the reason that we and consumers in aggregate are so dependent on using plastic or digital wallets on your phone or whatever, because the system that all those transactions go through, it just works. And it's simple. You present your card, somebody swipes it, it hits your account on the other end. If it's a debit card, if it's a credit card, it generates a loan balance for you. I'm guessing, I don't know statistics, but I'm guessing that for the kinds of purchases that we're talking about, there's probably it's at least 50-50, probably far more credit card purchases than debit card purchases. But as simple as it is, it goes off the rails. You know, we've got, as financial institutions, all issuers are experiencing every year more and more and more fraud related to those cards because it's, I won't say it's easy for the bad guys to be able to compromise your debit card or your credit card, but they're very creative and they do a good job at it. And frankly, all of the protections that we all have on our accounts at our financial institution are in no small part because of the, and I feel bad saying it this way, but because of the innovation by the people who are trying to get your money away from you. So they're always trying to find new ways to get money off your card or out of your account. And so all the protections that we have are prompted in response to all of this efforts. So we and Vermont Community Banks and everybody else try to do a very good job at keeping everybody's card safe. But invariably, something happens. Somebody who's handling a transaction someplace mishandles it, and the information gets out, cards get compromised, and financial institutions that have issued those cards to you, your credit union, you know, has to make good to you on the amount of money that you've lost. If you've lost money, reissue your card, put holes out on the other card, and so on and so forth. So there's dollars to it. As simple as the system is for you presenting your credit union bank card, credit or debit, to buy a $30 something in a store down the street. The system that makes it possible is incredibly convoluted. That transaction goes from your hand to your card to the merchant through whatever equipment that they use to enter it into a system. And from that system, it goes to the merchant's processor that's running that system for them. And from there, it goes into national and international networks, debit and credit rails. From there, it has to make its way through a couple different channels and find its way to your credit union's processor version of what the merchant's processor is. And then from there to your account at the credit union or bank. And then if there's fraud or a reversal, it all goes back in the opposite direction. And there's so many links in the chain, and it's extremely convoluted, but it works. So now comes, along this bill, S-135, and it wants to do something very simple. That's not convoluted. It wants to extract the calculation of interchange from taxes and gratuities on a transaction. And it sounds very simple. It affects two parties, right? The one on the initiating end and the one on the receiving end, so that's the card issuer. But there's all those links in the chain I mentioned in between. And that's a system that none of us control, not the state of Vermont, not credit unions, not banks, not card holders, not merchants. And it's not just the local system, it's national, it's international. And so there's a lot of considerations there. Paying for that system is interchange that we're talking about, this bill talks about. And I'm only addressing here for benefit interchange, not the merchants months, except the cash portion of the. So as you pointed out, Madam Chair, merchants don't, I think it was you, merchants don't have to accept cards. They do it as a convenience. Those cards, just like I said, are a convenience for us, convenience for me. It's easier than dealing with cash. I don't want to go back to figuring out how much cash I need to carry in my pocket for a week. I don't want to go back to writing checks more than I need to. COVID did away with a lot of us touching paper currency and everything. So plastic has become prominent for all of us in payments or some version of plastic, like I said, digital wallets. But there's a lot of costs that go along with that for all of that convoluted system between the point where you present your card and the point where it gets to your account. And there are costs associated with that. Never mind the fraud that comes along. And the interchange is, think of it like a fee for a service. It's a service, and those people that want to be able to make use of that convoluted system and have the convenience of presenting it or accepting a card from you and me, incur a fee for that service. And the average interchange fee in the United States is about 1.8% less than what I read. Now, just a point of clarification, because a lot of people get confused about this. The invoice that the merchant receives or whoever receives the card receives every month. You know, some people commonly refer to that as interchange. It's not. It's an invoice comprising a number of different things. You know, maybe you're renting your terminal, and there's processing fees, and so on and so forth. And one of the things in there is the interchange. The interchange is set by Visa, MasterCard, and whatever other national networks out there. And that's that 1.8% that was referenced. And a portion of that 1.8% goes back to the card issuing institution. So if we crunch the numbers, we're looking at that $30 transaction that I referenced. We're talking about the interchange on the taxes, forget the gratuities, the 6% tax on the $30 is about 3 cents. So we're talking about trying to come up with a system to remit 3 cents on a $30 transaction back to the card accepting entity, the merchant or restaurant that happens to be. And that's fine, except on the other end of the transaction, the people that that's coming from, the bank or the credit union or whoever else out there. In today's world and system, mechanically, we only receive $1. We have no way of knowing what the tax or gratuity is, which I think is trying to be addressed in the legislation. We just get $1 amount. You know, that $30 transaction plus the tax on it, and let's say there's a gratuity on it, it all comes through at $1 amount to us, and it either gets approved or it gets declined. And so there's no breakout. If there were a breakout of that, there are some people that have argued that it starts to edge into privacy issues and so on and so forth. I'm not espousing that, but there's a lot of tendrils out there, when we talk about this issue. So we get $1 amount coming back, and so the provision of S-135 allows the merchant to send through the taxes and gratuities somehow. I'm not sure how they would do that to get that to the card institution. But if there's a way to do it, that's fine. But on our end, at this point, the way the Visa and MasterCard and network systems work, those are all done one at a time, not putting a bunch through at one time. And I check with my office, who processes debit card transactions and some credit card transactions for some small and middle-sized credit system. And the cost for them to do that on a per instance basis ranges from a low of about $5 to as high as $50 in some instances, depending on what kind of transaction it is and so on and so forth. So, the bottom line of this legislation for me is that it is not generating any additional revenue or reducing any costs for the state of Vermont. The state and municipalities, if that's the case, are going to collect the same amount of tax that we state. The consumer is going to pay the same thing. They're $30 plus their taxes, so $280. The merchant is going to get, if they exercise their right to submit taxes and get rebates by some unknown means, or a rebate of the interchange on that dollar amount, are going to get some marginal financial benefits. But the card issuer, wherever that card issuer is, whether it's in Vermont or across the country, whether it's a bank or a credit union, whoever else issues a card, is going to, if we can find a way to make it work, going to jump through a whole lot of hoops and hurdles and incur a lot of expense in trying to deal with those on a one-by-one basis.
Hear all that, and I'm not the introducer of the bill, and we haven't heard from him, so I don't want to assume intent, but I have heard from a lot of merchants, but especially small businesses
Sure.
that are just like, oh my gosh, these credit card fees are killing me. And these must be the fees they're talking about, the transaction fees. And, to the point where some of them, in some cases are no longer accepting credit cards or no longer accepting them below a certain amount,
Or adding them the
or they're adding their own fee on top of it. And because this is including taxes and tips, my assumption is that this is sort of aimed at helping restaurants that are the ones that are probably collecting most gratuity. And those, depending on the restaurant, could be large amounts of gratuity. And, that for them is going to their employees, not necessarily them directly. So these are small businesses that are trying to cut their costs. So I'm sympathetic to that, and I'm wondering, the fee itself. I mean, is there an easier way to us to get at that problem than this? Because, it seems like the fee itself is disproportionately impacting small businesses because they have a lot of tiny little transactions.
right.
And and that fee, is it regulated? Does DFR, is there a regulator in Vermont that regulates that fee, or is it set by the credit card companies? Who sets the fee?
So I'm sympathetic to small business restaurants. We have a lot of those who are members of credit unions and you can your accounts there. So credit unions want to serve those people too. And I understand your point about the restaurant food establishment with gratuities, because I imagine in some cases that's going to outweigh the tax and whatnot. So I understand. So I can't speak to that issue specifically, but I do understand the whole regulation of the cost of accepting credit and debit forms of payment by anybody has increased, or the dollar amounts have increased, especially since the pandemic or during the pandemic. And I hear a lot of small merchants through our credit unions commenting about, wow, my processing for accepting, credit cards to pay for a bag of potato chips and whatnot skyrocketed to the roof and whatnot. But the part that I don't hear as often is, well, where do your sales go? Because it's in proportion to the amount of sales too. So that 1.8% that average that I referenced, and understand interchange rates are set by the national and international networks. That 1.8% that I referenced is a blend of all the different rates, but that's the average. And the interchange varies by, is it at an airport, is it at a gas station, and so on, at a restaurant, so on and so forth, and by type of thing being purchased and so on and so forth. So there's a ton of calculations that go into that in variables, but it's a 1.8% average. But that's not what the 1.8% is not what the merchant pays. The merchant is getting an invoice from the company that they hire to capture that data for them and send it off through the national and international networks and to get back down to your account at your credit union bank, whatever it is. And that entity charges other fees and one on top of that 1.8% to cover whatever they want to cover. And I don't know much about those entities as far as the regulatory environment is concerned. You know, it's not, what I do know is that it's not like for Chris and me, it's not like truth in lending for making a loan to you, where we have to have a disclosure that discloses everything the same way, no matter what institution you go to, it's all disclosed the same way. So it's simple by everybody.
Mhm.
I don't believe it to be like that for both those entities at this point in time. So for different merchants trying to compare the invoice that they got for accepting plastic cards this month, they could sit down with two invoices and they could look completely different, and things can be called different, and so on and so forth.
Yeah,
Um,
it's just like this is a fee that is essentially paying middlemen to move money around, which I don't know, sounds like privacy benefit managers to me for healthcare people in the room.
Mhm.
I mean, it's just adding a fee to everybody else.
Yeah.
And I understand that there's a transaction cost for doing some of it, but the fact that we can't really track where that's going and who's paying for it, and you are yourself a banker more broadly known in that general sense of the term, and you don't even understand it all. Just makes me, think we got to be able to figure this out more, because our small businesses are really hurting right now, especially restaurants.
Understood.
And, is only on a small part. So they still would have paid that transaction fee on, the 3-course meal they sent, or the pizza that they sold.
Right.
It would just be the tax and tips. So if there's another way to get at it, maybe it's better regulation of those middlemen. I guess should be a bar.
Well, and I recommend that too. Another way to get at it is, go back to cash and checks. Nobody wants to do that. There's problems with that too. I remember, I'm maybe the person in the room old enough to remember going to the grocery store and seeing signs at the checkout counter, don't accept checks from these people. I didn't want to go back to those kinds of days. And cash, problems with cash too. And it costs, if I accept cash from you, as a store, there's a cost for me in dealing with cash as well, in that I'm accepting it. I've got to deposit it someplace. I might encounter minimum balances. So there's costs all the way around. It's just a matter of managing. But you're right. I hear you.
I think there's a couple of problems. One, it isn't Vermont. This went through once before. We worked with the federal delegation because you weren't allowed to even put a minimum on it. I know, you have to have at least $10 or $15 to use a credit card. So, because if you swipe your card for a pack of gum, it was costing the merchant more than they were making on the pack of gum. But I can't see how this is an interstate commerce. I mean, and I can't see how the merchant would be able to invoice, because those you put your card in, you take your card out. Unless, and they'd have to prove it to you, because how does the processor know that this is the actual gratuity that's more than the meal? So I'll probably have to send you a copy of my sales slips, all of which would cost money to somebody, which would get paid for somewhere, probably by the interchange rate.
Well, and those are very good points. In particular, that last one that you made, I had kind of thought of before, but this legislation does allow someone who accepts payments by that means to go to your credit union with and I kind of being facetious, but it's possible with like people with their tax returns, with a shoebox full of receipts, and say, I want my interchange refunded on the tax and gratuity on each of these receipts. And so, there's a lot of problems with dealing with that. But overriding for me is, the merchant or whoever's accepting that card has 6 months to go to my credit union to say, oh, I want to collect refunds on these transactions from 6 months ago, and here's the paperwork or whatever it is to research it. And then the card issuer has 30 days to verify that one, who is the entity requesting this, two, are they rightfully entitled to this, three, what are the amounts if I'm getting paperwork and so on and so forth. That in itself is a
I
little
have-
bit of a glitch.
Stacks of receipts from my antique store to verify my sales for my sales tax that I collect. But it's the only way I have to verify. And yes, if I get audited, I'm going down with this paper bag full of little yellow slips and say, I went through them all. I've recorded them on my computer, on my, counting sheet. But this is how I can prove that I had this amount of sales and this amount of sales tax.
Right.
And there's a sales tax number up there for someone that's a dealer and didn't pay it. So, yeah, I mean, restaurants would have to somehow verify that they did. You could do the tax as a percentage of sales, but gratuities would be all over the place.
So that brings me to one other point that I think worth mentioning, and that's that you heard Rick reference about the Illinois legislation that's very similar to this with more words. And it's being contested in federal court right now since last year. And I don't know what the outcome of that is going to be. But this legislation, from a practicality standpoint, I would want to see Vermont become an island in an interstate commerce kind of environment. The networks that we deal with and the credit cards that are used with Vermont merchants and debit cards and whatnot come from all over the place, all over the world. And so, I don't think I would want to get to a point where we see Vermont having a different treatment of the debit card system and cards in Vermont because of this tax issue than you do in all the other states or international.
I mean, I can use my card in Canada. Used it overseas.
So you can use your card in Canada
Maybe.
today. Let's see what happens.
Maybe cash, and there's a limit on which cash you work over the border. So no down jackets anymore.
No, go for it.
Oh, really? Okay.
Yeah.
I have a story that leads to a question. About 15 years ago, when I lived in Germany, it may have changed since COVID, but the Germans were really skeptical of technology fees and they hated being in debt. So everything pretty much was cash. And I remember buying a car and my husband and I having to walk with 8,000 euros in a bag to go pay for our car. It's a true story.
Coins or?
No, no, 8,000. But my question is, I know that in Europe, fees are much lower on credit cards. I'm just wondering, I know we're not Europe, but how those companies survive over there with much lower fees than they do here? If we can survive here.
That's a really good question for somebody who's not me.
Okay.
I can't address for you the differential in interchange, much less other things between different countries. I know that European, well, if it's the European Union or individual countries have done something with interchange in those areas and work something out with the larger financial institutions that are there for the having larger conference. I do have a story for you to match yours though, and that's that. So I had the opportunity some years ago to go visit credit unions in Poland to learn how they operate differently than we do here. And Poland at the time was very much a cash-based society too. Credit unions served a lot of people out in the rural landscape, like you were referencing. And people would have to determine how much cash they were being. They would contact their credit union, and their credit union would send cash to them via the Polish version of the U.S. mail. So a mail carrier would be delivering a bundle of cash, like Wild West stagecoach days, out to the countryside. Somebody living on farms and things.
Yeah. Yeah.
Interesting times.
Okay. Good, did you have one?
It's a general question.
We're gonna move us along.
Do United States, we allow rewards cards.
Mhm.
And those are brutal. Those are the worst of the worst towards merchants. Do other countries allow rewards cards?
I couldn't tell you that. I don't think that Visa and MasterCard have, reward cards for just the United States and obviously North America.
Yeah.
I don't know about the Europe and so on. So I can't tell you that. I know that the people that, and there are other people in the State House who can probably answer this better than me. Reward cards are, as you referenced, the interchange rate is going to be higher.
They're enormous.
On the other hand, the people who carry reward cards with them have place a lot of value in those reward cards
They're
too.
gonna get some for free.
Right. Right. And well,
On the backs of the small.
And it was the advent of those rewards cards that caused this committee
Yeah.
to look at this. And I think the conclusion then was it needed a federal.
Yeah.
Yeah,
Those things are killers for
Yeah.
merchants.
they are. Because the merchant is paying for the reward. Yeah.
Yeah.
And yes, and you can't pay your taxes with your credit card without paying an extra fee because we found out we were paying for people's travel to somewhere because they come in and pay their entire taxes on their bill. Got this huge reward. And the state lost money. So we do charge a fee. Okay. 6%. Thank you.
thank you so much.
Okay. So we're gonna leave this one and move on. We are now 20 minutes. So, but we're going to move on, relating to insurance products. This is the housekeeping bill. DFR, is Sandy, no, Sandy's not here. Sandy on Smith. So maybe she's there. Okay. Sandy, you're the.
I'm the hot seat right now.
Yeah.
Okay. I'm gonna do a little bit of switcheroo.
Right.
Yeah. I'm gonna try and find right. This is where I hope these notes on. Yeah. Okay, we are doing our walk. There we go. So welcome, and I think you can just kind of tell us about captive insurance. Looks like this is a combination of DFR housekeeping and our annual captive bill, so walk us through.
Chair,
Fairly simple for a captive bill.
thank you. We worked really hard on that. Sandy Bicklestone, current acting commissioner of the Department of Financial Regulation until April 14th, and also
Okay.
deputy commissioner of the captive insurance division within the DFR. So the captive pieces are in sections 5 through 14 of H-137. Want to handle those. We also have Deputy Commissioner Brown and Deputy Commissioner Ferentz. Some insurance and banking respectively in the room, so I think that would be good to hear from them on the other pieces of the DFR deal. Okay, great. So section 5 of H-137, which finding page 5 of 34. So you're saying, okay, great. This is clarifying licensing authority, and it's to really align the lines of business lines of insurance business and the types of insurance policies that are we also refer to in the traditional statute under 3301, section 3301 of Title 8. And we found that simply referring to 3301 would improve this section. So that's what this section is actually doing. So where you see in Part A of 602, rather than trying to maintain the various sections within 3301, we are just saying that captives that apply for a license can conduct insurance business comprised within section 3301. And then there's no risk to that, I would say, because there are other areas of section 3301 that sort of limit the authority. So no personal lines, no homeowners, things like that. So where we need to limit the business, we do, and keep it primarily strictly for commercial insurance. So just simplifying.
I know the drafter was the captive can be formed for any kind of insurance that are offered in Vermont. So if they can offer that kind of insurance.
Any questions on that? Moving to section 6. Again, more clarification. These are primarily housekeeping items. This is related to signing authority of individuals in a manager managed limited liability company. Our statute refers to Title 11 with respect to limited liability formations, and in a manager managed limited liability company, the operating agreement expressly provides that companies will be managed by managers, and managers in these cases have the exclusive authority to manage the conduct and conduct the company's activities and operations. And they, for the most part, operate much like officers of a corporation, but they're not named officers. They're just referred to as managers. And so there are various sections within the captive statute that are just seeking to update the language where appropriate. And by adding individuals authorized by the governing board alongside language that's specific to officers as in a corporation.
So if the board investigates the manager is fine.
That's right. So 604 is one of the first sections, and it relates to capital and surplus within a captive. And we're just adding language for 2 individuals authorized by the governing board. And then there are various other sections that I'll just quickly refer to that meet the same purpose for the amendments. Any questions on LLCs? Okay. Moving on to section 7, again, clarifying the amendments. This relates to governance of captive insurance companies formed as mutual insurers. And the provisions within Title 11, again, for LLCs were updated. We discovered that they were updated in chapter 21 to chapter 25. And so we're just aiming to fix that reference within section 7 here of the bill. And then again, in addition, we want to, we discovered that within section 606I, we felt like it could be improved by adding provisions relating to mutual insurers contained in the statute by referencing sections 3303 and 3311, which pertain to how mutual insurers are governed. And when we form captive insurance companies as mutual insurers, we do refer to those sections within the traditional statute. And it just sets out how the election of officers and meetings of policyholders shall be held, and so on and so forth. So we think this is an improvement by adding references to those sections. Section 8 just follows the updates recommended for manager-managed LLCs by adding the language individuals authorized by the governing board. Section 9 does the same thing, just another area of our captive statute where that language should be updated. Section 10. This section pertains to 6011, which is reinsurance for captive insurance companies, and reinsurance is insurance for insurance companies. And what we are aiming to do here is to align the language with the authority under 602. It'll provide more consistent language, I would say, between these two sections, 602 and 6011, and avoid confusion between what's allowed on a direct basis within a captive insurance company and what's allowed on a reinsurance basis. And so simply we are looking to refer once again to section 3301 for the lines of business. And then, it adds language about reinsurance of policies approved by the commissioner, comprised in section 3301 of this title on risk of its parent, affiliated companies, and controlled unaffiliated business. So that's an improvement to make sure that the business is within the family of.
Okay, my notes from the other day said captives can operate any reinsurance allowed in Vermont. Is that essentially what this is doing?
It will allow any reinsurance that relates to the business of its owners,
Okay,
affiliates, or controlled unaffiliated. Yeah.
okay.
So it brings it into alignment with how we approve business on a direct basis within 602. And another way of looking at it is if we were to allow a captive insurance company formed by XYZ Corporation, and they were to take on reinsurance of 100% third party business, that would no longer qualify as captive. That would be a traditional reinsurance company.
Okay. Yeah.
Yeah. So we're looking to limit that. Section 11. This is also another section that follows the needed updates for the manager-managed LLCs, adding individuals authorized by the governing board. Section 12, same thing. Section 13, same thing.
That's exactly what my notes said.
I know, isn't that great? But stop me if I'm going too fast. Section 14. This is the last section for the captive amendments in 137. And this involves governance standards for risk retention groups. Risk retention groups are a particular type of group captive established under a federal law, but state law has to have the authority to regulate them. And so what we discovered relates to just simply to correct the statutory construction of 6052 G1C. We noted when there was, it came from one of our examiners who was referring to our governance standards for one of our insurance companies and just happened to notice that there were some lettering and numbering errors of that section pertaining to independent directors. And so this is merely fixing that.
Technical cleanup.
Yeah, and then there's also the manager managed LLC language. Yeah.
Okay,
Easy peasy.
okay, any questions? See,
Thank you.
thank you.
Appreciate your time.
Yeah, appreciate yours and for being patient with us.
Of course.
Okay, going back to Emily.
Yes.
Well, again. Yeah, you were here a lot yesterday.
For the record, I'm Emily Brown, Deputy Commissioner of Insurance for the Department of Financial Regulation. I'm here to talk about the insurance sections of the bill. But I did want to include comments about section 1 and section 2, which are, I view them as cleanup, but I thought it was important since those are the two before I start mine, but I would just talk about them. So the first one is a change that brings in all of the entities that DFR regulates. So right now, the way the statute's written, it only refers to entities regulated under Title 8 and I believe Title 9. And so there are entities under Title 18 that we also regulate. So this language is to clean up and make it broader so that with the existing entities we regulate, as well as if any are added in the future, it will be very clear that our confidentiality of investigations and examination reports apply to those as well. Section 2 is also a cleanup. This was a cross-reference that no longer exists. So Ledge Council caught this. Section 75 had been repealed and was replaced with subsection 15A of this title. So that's also a cleanup. So now I will start getting into the substantive sections of the insurance parts of our housekeeping bill. So section 3 is a change to our filing requirements. Right now, our rates and form section for property and casualty coverage, we require a use and file, meaning that if the company wants to use a product or use a policy in our state, they're allowed to file it 15 days before they begin to use it. It is
16 days, because I had after.
I'm sorry, not later than 15 days after the effective date of all of these, yeah.
Okay.
So what this would do, I got ahead of myself.
After in the state.
I got ahead of myself. I was thinking about the new law. So what this does is it changes it and allows the department 30 days before the product goes into use for us to review it, to make sure the filing is complete, make sure we don't have any questions about the policy. And what this does is it creates a smoother process actually, because it allows the department to review it before it's in use.
Yeah.
The company then does not have to go back and change anything that's already in place. So we're viewing this as a cleanup, but also hopefully improves our filing review and the efficiency of our filing review. The next section 4 is on affordable housing and unfair discrimination. So what this does is it prohibits insurers from prohibiting against recipients or users or providers of affordable housing in the state. So if you construct affordable housing, if you receive subsidies from the state or the federal government, also if you are a renter, it prohibits the insurer from using any information related to an individual's income or an individual's receipt of subsidies or subsidized housing from the government as a factor in then writing their insurance or determining if they want to insure you and also what rate they'll charge you. So this is making clear that, those factors are not allowed to be used in insurance decisions around, insurance coverage.
If you've been evicted or destroying your apartment, that will be factored into your next rental insurance.
Yeah.
But just the fact that you are in an affordable housing unit cannot be factored.
Exactly. And the department did view this as unfair discrimination before this section, but we felt with the current environment around housing that this was important to voice these issues. Yes, and so, while we feel like this is currently reflected in law, we thought it was important to be explicit. Okay. The next section is, we're jumping to 19, for the next insurance related section of our bill, and this is, DFR developing a recommendation regarding insurance and genetic privacy. So as some of you might be aware, I'm looking at it right now. I believe it's 40, either 42 or 47.
27.
47 in mine?
Secretary?
That's
Oh, you know what? I'm on, yeah. I think I'm on I'm on the strike all, I'm sorry.
It's page 27.
27, thank you. Yeah, I was looking at the red line that was passed out of the house. Sorry about that.
Zero bill.
I thought I was looking at the wrong place.
what section is that?
Section 19.
19.
Yeah.
Okay, so that.
So this is asking DFR for a recommendation in regards to unfair discrimination based on genetic information. So some people might be aware of the news. 23andMe was a company that a lot of people use to look at their genetic code, and that company then I believe went bankruptcy or insolvency. I can't remember. So there was concern about what's happening with that information. So what this does is it asks the department on whether Vermont should enact a law prohibiting or limiting insurance companies' access to a consumer's genetic information, and also whether there should be a requirement that the company obtain consumer consent prior to the disclosure of genetic information obtained from one of these third parties. There are already protections under Title VIII for genetic information. But this would be kind of looking at the separate issue of information that's outside of the individual's medical record. Any questions on that before I move on? Okay. All right. The next insurance section is section 20. This is changed to our Medicare supplement insurance rate review process. So currently under existing statute, when we receive a rate request from a Medicare supplement insurance company that is over 3% and also impacting 5,000 or more policyholders, we are required to do very complex actuarial review that involves not only our actuarial firm that we usually use to review Medicare supplement rates, but then also hire another actuary to perform an identical review. This is in addition to the actuarial work that the insurance company has already done. So you end up having 3 actuarial opinions developed in this process. And then the way existing law works is if the rate that's developed by those 2 actuaries we hire varies by, I think, more than 2%, we are then required to have a hearing. So what the outcome, since I've been at the department and working on health insurance, the outcome on these, I would say 99% of the time, is that actuaries, because they're standardized practice, end up coming out with a rate that is almost the same. It's very rare that we get a rate that varies to the degree where we have to have the public hearing. And if we do have to do that, a lot of it's because there was something missed, and then in that hearing, the solution is found and there's agreement. So what this has done is it's created a lot of work for the department, a lot of expense. I don't know how many of you know how much actuaries make per hour, but it's significant, it's also more than me. And it's just led to actually delays in getting these rates to market, which is how these changes evolved, because there was concern that this was holding up rates and people then weren't able to shop appropriately when they were enrolling in these plans. So that was the impetus for these changes. What this bill does, or what the changes do, is it eliminates that dual review requirement. And it also makes other adjustments, which I'll go through step by step. So the first change, which is in 40 of the subsection A, is to require the department to post these filings on our website. So anytime within 5 business days after receiving a request, we then will put the information listed in the statute on our website. So people who have Medicare supplement plans and need to plan for the next year can access the information and figure out get an estimate of what their potential increase will be.
So yeah, questions. This might be a broader question, but does DFR regulate other health insurance, set the rates for other health insurance?
Yes. Yeah, we do.
Okay.
Yeah. So all of you know that we do not oversee the qualified health plan rates for the individual, the small group, as well as larger.
Yeah.
But aside from that, there are several other different types of health insurance products that we regulate and approve rates for. And one of those is Medicare supplement.
And do you know why there was a split between your authority and Green Mountain Care Board authority?
Yes. So it was before my time at the department, but I believe there was a decision made because I think I'm gonna botch this, so I don't know if I want to, but essentially the decision made to move major medical rate review over to the Green Mountain Care Board. Because I think at one point there was going to be a system whereby all of the hospital budgets and the insurance rates, single payer, was going to be handled under the Green Mountain Care Board.
Mm-hmm.
And the idea was that it made more sense for it to happen under one entity, agency, and not be under DFR, which, while we oversee the solvency of those insurance companies, the rate review piece has been moved away. We do review the rate for VHI, which are the teacher health plans.
Yeah.
So those are major medical, but they are retained by DFR. So it's very nuanced, but generally, if you think of major medical, that's done by the board. And then everything else, supplemental health products, accident policies, those are all done by DFR still.
Okay.
Yeah.
Interesting.
Okay,
Okay. So
got it on your website.
yes, we got it on our website. And then within 5 business days after we receive the request that falls into this 10% or over 5,000 lives, we must notify Dale, which currently we have to do anyway. And then also we've added in here the healthcare advocate, which right now under our current practice, we notify them anyway when large rate increases are coming or when there's an impact to Vermont consumers. So this is codifying that practice.
Okay, so within 5 days, you have to notify.
Correct. Yeah. And then within 5 business days also, so within 5 business days, Dale and HCA, and then we have to, sorry, I'm just scrolling and making sure I'm not missing anything. Then Dale and the HCA have the right, if they request for a hearing to be had, as well as if there's 25 or more policyholders who want to have a hearing. So there are these triggers that come into effect if Dale or the healthcare advocate or more than 25 policyholders believe that there needs to be a hearing, they can request that under these changes.
Okay, so Dale or Health HCA.
Yep.
Healthcare advocate.
Correct.
Okay, can request for 25 policyholders can request a hearing.
Yep. And the department is also required to solicit public comment regardless of whether there's a public hearing. And the commissioner can also hold a hearing at their discretion. So that was also added. And the last major change in this section is a filing date requirement. So right now, there's no requirement for an insurer to file their rate request by any date. So they could come in September, and that puts a lot of pressure on the department's resources to get that turnaround in time for January 1. So this implements a July 1 filing date for any Medicare supplement rate that's going into effect on January 1. And for all other rates, because there are some that are effective in July, don't ask me why, they need to file 6 months before their effective date. And the hope is that this will allow the department to plan a little bit more efficiently for all the rates that come in, and hopefully be able to review them in a more timely manner so that there's not a delay in getting the rates out to the public.
Okay.
And that concludes the insurance sections.
So you have to file July 1 to go in, so basically 6 months.
Exactly.
And if it goes into effect in June, you have to apply by January 1st.
Exactly.
Okay. Okay, any questions?
Yeah.
We'll walk in the Aaron. Yeah.
Good afternoon, everyone. Aaron Parris, Commissioner for the Banking Division of DFR. Thank you for having me. The sections touching the banking division within this bill start in section 15. And this section creates an exemption for small payroll processors from our money transmission licensing act. You might remember last year we adopted the CSPS model money transmission act, and this will allow provide some clarification to the industry. As previously written, it would really essentially touch any payroll processing company in the current iteration that may touch a Vermont resident. And this provides better clarity to the industry so that you have to be at a certain level. So some of the requirements within this are that you're exempt if you provide payroll processing services to 25 or fewer employers that are based in Vermont. Provide payroll processing services to less than 500 total companies anywhere in the country. Do it to less than 300 employees, and some other requirements. So you would have to meet all of those components of the exemption to qualify.
Not convicted of any crimes.
That's correct. Not convicted of any crimes, and also conduct your activities through a third-party segregated bank account, essentially, so that the funds are not at risk. Any questions on that? The next section is number 16. This makes changes to Title IX, Section 42, in statutes related to usury and what you can charge or your interest and need to be charged. So for a long time, it's not been possible for a borrower in a subordinate lien mortgage, so like a HELOC in a second position, not your first position, to actually pay a discount point where you're buying down the interest rate that you're paying on the loan. So this language would actually add that into the permitted charges statute so that a borrower could do that if they elected to, and pay money today to reduce the interest rate that they paid over time in that particular loan. So it's entirely up to the borrower to do that. Let's see, the next section is section 17. This is study language, which would request DFR or require DFR to conduct a study regarding transaction hold language. So this would, transaction holds would essentially allow a bank or a credit union, financial institution to stop a transaction from occurring if they had suspicion that the customer was going to be the victim of a crime. So think of maybe an elderly individual who's gone to the bank and says, my love interest in Russia needs $10,000 and I need to withdraw it now. The study would evaluate how we could implement the financial institution's ability to sort of hold on to that transaction while maybe there's a trusted third party they could contact instead of just having the consumer lose their funds.
We have a lady who did that twice.
Unfortunately, we hear about stories like that all the time.
Are you saying I should be sending my love interest to $10,000?
I don't think we should.
Yes.
I could give you an address.
Yeah, so there's other requirements that the study is asking us to do, and that's what's easy. Section 18 is also another study. This study is really asking us to look at how Vermont should or should not, and to what extent implements protections for victims of coerced debt. So what is coerced debt, I guess you might be asking, is so let's say I'm in a domestic relationship and I take advantage of my spouse. Maybe I steal her identity and I sign her up for loans that she was not aware of, or she had no power to stop me from doing. This in concept there might be provisions in statute that we could add that would relieve her of the responsibility of paying for that. This would be a study in terms of identifying how and to what extent again that would.
Is that inspired from incidents, or is this something you've heard about other states doing that it seems worth exploring further?
This wasn't our initiative. This was added by a member of House Commerce, and some advocates they were
That's
working
right,
with.
their House Commerce added some things
Yeah.
to this.
Yeah, so,
Studies.
yeah, studies, exactly.
Okay.
The great compromise.
I think studies they've grown on me.
You should be on health and welfare.
Any more questions on that section? The next section would be section 22. It is about crypto kiosks, but this section would just extend the moratorium for one additional year.
Right.
I understand you've taken testimony on another bill related to consumer protections and how that industry should work. No matter where we get with that particular language, we'd still like the moratorium to apply.
I think the moratorium is in both bills.
I believe the other bill removes the moratorium.
Oh,
It does. I put it in the industry. We have them in this week.
Yeah.
My advice was that they went forth and continue to negotiate with you. You're very close. And if agreement can be reached, then it could be put on here, but I'm not inclined to take up the bill to do it apart from DFR's approval.
Okay, yeah, I appreciate that. We have been talking with those, with that group. Again, like I said, regardless of where that discussion ends up with any consumer protections or language about transactions, fee structure, we would still like the moratorium to be in place. It would be a moratorium and those new market requirements, or just the moratorium and the existing.
This just extends what we did 1 year, so we can
Exactly.
continue to try and figure out how to regulate it. That's under her.
okay. Thank you. I think you were sitting in the room when we did that previous bill. So
I was not.
you were not. Oh, okay. I just wondered if you do regulate transaction fees, credit card transaction fees?
We do not regulate credit card transactions.
Does anyone?
I think there's, most credit card companies are national banks usually. So those are usually regulated through the Office of the Comptroller of Currency. I have to double check. There might be federal regulations that I'm not thinking about, which provides some units in that regard.
Well, maybe you can look into it and come back on that bill if we're gonna do it. I don't know if we're, Madam Chair, but
If it gets done, it'll be in here, but if there's a case pending in Illinois,
Oh, you're forgetting.
interchange
credit
fees, sorry,
Sorry, no.
interchange fees, I call them.
I'm not inclined to do anything until that case is settled. To find out if it's legal to do anything.
Right.
Um,
As I understand the Illinois case, there's a lawsuit. A lawsuit has forbidden them from doing that for national banks or out-of-state, state chartered banks. So currently the law only affects the banks in Illinois. So as a state bank regulator, I wouldn't want to impede our own.
Well, interchange fees, who regulates them just in general? Do you regulate them? Or
We do not.
They're
regulate
federal.
them. That's essentially set by the card networks and sort of a market-based approach.
Oh,
and in the,
market-based approach, that's why they're high.
and in the past, we've kind of walked carefully because state banks can give up their state charter and become national banks. And so when we've been looking at banking regulation, we've been trying not to give them an incentive to leave our control.
That's correct. We have a dual banking system in America, and that's actually a really strong point about our banking system.
So watch this with.
I wasn't prepared to talk about that one, but I thought I was able to.
On the moratorium, so I definitely support the year, and a lot of red flags went off for me yesterday, and I'm still trying to find out why one of the kiosks was closed. It seems like important information for us to know that that we're not.
Sure.
But my question to you is, do you have reason to believe that it's likely one of this is or end the moratorium a year from now, or should we make a 2 or 3 or 5 year moratorium? Is the 1 year enough to get a better handle on this?
Well, I think another year would allow us to either develop more robust consumer protections. We did issue that report. It did make some recommendations. Even since we published that, we've learned more. So it does buy us more time. There are other states that are getting involved in regulating these and these transactions through the machines. So.
1 year at a time, keeps everybody on their toes.
If you felt longer, we would support longer.
I feel that way if you said we should do longer than 5 of the year or 5 of the year.
Okay.
You're
Anything else on subjects in this bill?
Just while I'm up here, there was one other thing I think is going to be added regarding changes to the banking statute. I don't know that it's actually been added to this, but if you want me to provide testimony now, I can.
I haven't heard that. Okay. I haven't heard any.
This is my.
Oh, it's your amendment.
I can come back at another time if you prefer.
Well, it'd probably be helpful if we heard the amendment. I've got Chris here on the bottom. I'm looking at the people ahead of Chris. Could we put Chris up next? We have Robin Brugno. I assume she's on Zoom. Oh, no, you're back here. Is it all right with you if we do Chris first and then
Chris and I think are package, that place.
oh, you're. Oh, you're Chris too.
There's a few Chris's.
There's 2 Chris's. That Chris and all right. Let's put this Chris on. So Aaron can have his response to that Chris. And then we'll put in who's, oh, David Pfeiffer, Rocket Morton. He's on Zoom. He is on Zoom. Okay. Tell him we apologize, but we're a few minutes behind. Okay. Oh, And I assume this is on our web.
Yes, it's under my name. So for your record, Chris Delia, President of Vermont Bankers Association, just to respond to a couple of other things in the bill that Aaron went over. So page 23, lines 11 through 13, no issue with the discount fee language that's in there. 23, page 23 through 25, the study on the transaction hold. It's actually something that Chair Marcotte and I had talked about. It's something that exists in other states and it is a good fraud prevention tool, but not enough time in the session to really do it justice. So let's work through the summer and fall, look at what other states have done, come to agreement on the language and bring it back to you next year.
Yeah, I think that would be good.
Yeah. Page 25 through 28, that's the course debt. This is something that Representative Granning was working with the Vermont Network on Domestic Abuse last summer. She came to me in Thanksgiving timeframe and wanted to talk about possibly moving forward with legislation. The upside is we need to do something for these individuals who find themselves in these very difficult situations and situations that, from a credit perspective, hang over their heads for many, many years. The problem is, how do you do it? Because if it's on credit card debt, that's one thing. When it's on secured debt, like a car or your house, that's a totally different issue. And then there's a lot of mechanics that went into it. So it became very clear in meeting with the network and the representative that this was complicated. And we needed to step back and take time to figure it out over the summer and fall and really do it justice next year. So we will bring it back to you next year. So support that. The amendment that you've got on your website under my name is something that was brought to my attention after the bill was voted out of the House Commerce Committee. And it's something that one of my banks is exploring right now, and that's the creation of a bank holding company. We have 6 bank holding companies in Vermont. They're looking at creating one for their own institution. And before I go any further, because you're the Committee of Finance, I want to let you know that there's 2 taxation policies that would be in play here. One is under the bank franchise tax. You will see no difference because the bank will still pay tax on its deposits. The slight other side for you is the bank holding company pays under unitary combined reporting. So if the holding company generates any income revenue, you will also see a little bit of taxation under the holding company, and unitary combined went into effect many, many years ago in Vermont. So you will not see any negative effect on tax revenues to the state of Vermont as a result of this. What they ran into in doing their homework with both Department of Financial Regulation, but more importantly, the FDIC looked at our statutes regarding mutual financial institutions. And the FDIC, while they don't opine on legislation or proposed legislation, felt that it was not strong enough from a depositor's protection to the institution. There are corporators within a mutual financial institution that will be involved. And what the FDIC was saying is we don't want those corporators to be so dominant that the depositors are not taken care of in these situations. We don't want them making decisions that are inappropriate for the institution. So the language that you have in this amendment, which are 3 sections, was created by the lawyer for the financial institution, shared with the Department of Financial Regulation. And to my knowledge, the parties have signed off on it. I sent it over to Maria Royal just so she had a heads up and could put it into your legally drafting language. And that is what is before you today. And that's what I'm offering as a proposed amendment. So if you look on the bottom of page 1 of the amendment, parentheses E would be new. More than 50% of all corporators shall be depositors of a financial institution. So again, a mutual financial institution is owned by its depositors. This is a protection to ensure that those depositors are the majority of corporators that are associated with it. F is at least 2/3 of all corporators shall be independent. As used in this subsection, an independent corporator means an individual who is not an employee, director, or officer of the financial institution, its subsidiaries, or its affiliates. You don't want to have it skewed so much to people on the inside. This is again to protect those depositors when making decisions for the financial institution and any votes or meetings that may take place. And then G really spells out the expectation of a corporator. And that's corporators shall be fiduciaries of the depositor base and shall exercise their authority in the best interest of the depositors with a duty of loyalty and care. In exercising their duties as corporators shall consider the interest of the depositors, the borrowers, and other customers of the financial institution, the general benefit and economic well-being of the community served by the financial institution, and the safety and soundness and general business needs of the financial institution. So this is ensuring that the depositors are being taken care of, thought of. The emphasis is focusing on the community that a mutual institution serves. And it is the belief of legal counsel for the institution that with this language and statute, it will create a greater level of comfort for the FDIC to look favorably on any application they would receive.
Okay. Questions? Okay,
Do we have to take testimony on the amendment?
we're gonna get testimony from DFR right now, and then we can pay more. Do you would want? Not knocking this out of here tomorrow. Do we have any questions for Chris? Seeing none.
Thank you.
Percolate in the next 24 hours.
Sure.
This is a lot to absorb.
Just to add, there are only 2 mutual savings banks in Vermont right now. One being the proposer, the second we have checked with, and they are fine with it as well. GFR has worked on this. We are okay with adding this, these provisions.
Much counsel.
It's easy. Thank you. So we've got one that wants to become a bank holding.
We have the one
We have
institution that's
2.
proposing these changes. They would like to form their bank holding company. This will help them.
Okay.
Or at least it will better outline the structure of how they do it, I guess is how I should say it. There's another mutual savings bank in Vermont who has taken a look at these changes and is okay with them.
Okay. Okay. Bank holding company is a separate company that holds a bank, that owns the bank.
Correct.
Okay.
Correct.
But it is a separate entity.
That's correct. We don't directly regulate the holding company. They are all regulated by the Federal Reserve.
Okay. That's how the FDIC gets in here. Okay. Questions?
Good afternoon. Mike Fisher, not often that I get to sit in the committee talking about bank holding companies.
I was going to say, we don't, yeah.
It's a new experience for me. Healthcare advocate, Mike Fisher, healthcare advocate. I'm here to talk about section 20 of the bill and support for section 20 of the bill. We at the Healthcare Advocates Office spend a lot of time focused on insurance rate review over in the Green Mountain Care Board, Qualified Health Plans and the large groups. And from time to time, we get alerted about a particularly big increase in Medicare supplement insurance and have weighed in and have cocked our heads and wondered about this very old statute and how it could be as awkward as it is, and always thought it made sense to update. So this is a good change. I think sort of a high level, striking, the goal here is to strike the right balance between efficiency and not being too burdensome on anyone, the state or the carrier, and also providing for public comment, an opportunity to public disclosure, transparency, and opportunity to review things. And so I think this strikes a good balance. We support it. I was going to say a sentence or two about how we come to be in this situation with parts of insurance in one place and parts of insurance in another. In response to Senator Hardy's question. But maybe I'll just let that go and follow up. Unless I'm sure that's possible. I sat in a different place in this process.
All got tied into single paper.
Let me just say, Act 48 of 2011 did three things. It provided for a government financed healthcare system. I try not to use the term single payer, it never was. Right. And set up the Green Mountain Care Board and comply with the Affordable Care Act. And so things changed. And the Affordable Care Act was focused on insurance products and Medicaid for people under 65. And so it had there were lots of pieces to the Affordable Care Act. I won't say that it didn't touch people over 65, but in the insurance world, it was really focused on people who did not have Medicare. I should say people under 65 and who are not disabled. At the time, the discussion was this was a major piece of legislation that was a first step, and that there needed to be a second step to address the world of health access for people on Medicare. Needless to say, things did not go exactly according to. So that's, I think, in large part why we at the time were focused on that part of the market and weren't addressing the market.
There were jokes about people wheeling their desks from Michigan down the street to the Green Mountain Care Board. A large portion exited Chicago.
Yes,
That's some sort of,
and that's
and became the EFR.
yes.
Okay, no questions. Thank you.
Thank you.
That was easy. All right. So I've got Robin and Chris, the other Chris. Yes. All right. This is payroll.
Thank you. Thank you for your time.
We just ask that you introduce yourself for the record, who you represent, and then the floor is yours.
Thank you. My name is Robin Brogno. I represent two associations, the payroll group and the Independent Payroll Association. Both organizations represent small and medium-sized payroll companies across the country, some of whom are here in Vermont. I happen to be here in Vermont as well. And we had an opportunity to weigh in, and thanks very much to the Deputy Commissioner on the payroll portion of this bill, H 137, which really carved out a niche for small payroll processors. And there is a huge distinction between the small payroll processors and the national payroll firms throughout the country. Most specifically, and I really want to take a look back at the last 5 years, I think, to talk about the small payroll community here, which represents about 250 organizations within this state, which many of which could be accountants, bookkeepers, payroll firms, 20% of which are organizations with less than or more than 20 employees. So most of them, in other words, are small employers themselves, which is all of Vermont. In COVID years, we worked with the businesses here in Vermont and walked them through how to apply for things like the PPP loan when no one knew what PPP stood for. We helped them identify which reports could help them apply for those loans, could help them apply for the forgiveness of those loans. When they didn't understand what the Shuttered Venue Act was, we explained and walked them through those pieces of those regulations. When they didn't understand what the FUTA reduction credit was for the sick leave, and they didn't know how to use those credits to pay Vermont employees their sick leave, we made sure that they understood it. And we didn't do it between 9 and 5. We did it when their businesses were closed so that they could service their clients, because at that point in time, they were open whenever they could be during COVID to make sure that they could service the needs of the community. And that could be at 7 o'clock at night, or it could be on Saturdays or Sundays. I worked with businesses on Easter Sunday. It could have been the Country Girl Diner in Chester, Vermont, or the Wethersfield Inn. Those national firms, you know, Big Blue and Big Red, weren't open on those days. And quite honestly, back then, they didn't want to get involved in the PPP loan or PPP forgiveness. And many of the multinational accounting firms didn't want to touch those either. So it was the small community payroll companies that help small businesses. That's what we do. That's what we've always done. And that's who we are. So we truly are grateful to have this carve out, because had the bill, or if the bill stayed the way that it's been enacted, the small payroll companies could not pay what we would have had to if they in business. We couldn't afford the way the bill had been enacted, requirements around it. We wouldn't have been able to continue as organizations. So we really are grateful for the work of the commissioner and several of you around the table. But I wanted to share as well, I apologize for the size of the font, but we have this testimony.
Okay, Robin, if you could send us something in writing,
Sure,
that would
I
be
can make
helpful,
it
because I
smaller.
think a lot of us don't know about you.
Sure, I would be happy to. So I do want to share with you a little bit about some of the things that we do to protect, that we have to do. Our banks actually require us to do, and having bankers here, I think it'll be interesting, but some of what we are required to do that protect our interests with our bank, and that we have to do to protect our clients. Our bank requires that we, on a quarterly basis, provide what's called this know your customer. So we provide a quarterly report to our clients, or to our bank rather, about who our clients are, including what their NAICS list of what industry they're in, because we're only allowed to work with customers in certain industries. So if they're high risk industries, we can't work with companies in those kinds of industries. So a high risk industry are probably industries that most companies would want to work with. So maybe industries that are carved out, like money laundering industries, more industries that can be perceived. We also are required to provide audits for the National Automated Clearinghouse Association. It's called the NACHA audit. So we get audited by an outside firm that comes in and makes sure that our files that we send to the banks are in compliance with NACHA rules, and that they are making sure that we don't do anything outside of what NACHA requires us to do, that there's no reverse file entries, and that they're coded properly. Our bank also requires that we have a SOC audit. And we have to go through a SOC audit outside on an annual basis. Those audits alone can cost us anywhere between $25,000 to $50,000. We pay about $35,000 for that audit. Our organization does. A notch audit can cost anywhere between $5,000 and $7,000. Our bank also requires us to provide a personal financial statement. So on an annual basis, they know exactly where my money is. They also require us to provide an OFAC on every client that we have, and that is required twice a year. And an OFAC, for those of you who may not know, that's the Office of Foreign Asset Control. So again, that's to ensure that the organizations that we're doing business with, that there's no money laundering or that they're not on any protective lists for the U.S. government. In addition, the bank meets with us twice a year. They check the terms and conditions of the clients that we're doing business with, and they review the terms and conditions of our agreements with the bank. And then finally, the IRS has us sign an 8655, which is a form for our clients, and our clients sign an 8655, which allows us to make federal deposits for their tax money on their behalf. That 8655 basically tells the client when they sign it that they can look behind us, that they can check at any time to see where their tax money is going. And we, every quarter, when their tax deposits are being made, remind them of that. So at any time, a client can go in and watch their tax money is being made. So those are all the things that we have to do to stay compliant with our bank. So we have, I would suggest, fairly tight controls that we have to follow now as a small organization. So we hope that you do provide us with this carve out so that we can continue to provide the kinds of services that we have always provided to small businesses here in Vermont, and allow us to do what we've always done. We will continue to care for them if you allow us to continue to care for them. Happy to answer any questions if you have. Committee, any questions?
Just quick and simple, just to make for sure I understand you're in support of the bill as it is.
For sure.
Okay.
Great. Absolutely. Thank you. Okay. I don't see any more. Thank you. Thank you.
And next, we have David Pfeiffer, who is on this meeting. Welcome, David. We just have you identify yourself, who you represent, and then the floor is yours.
Yes, Chair. I'm David Pfeiffer. I'm with Rocket Mortgage. Thank you for having me today and allowing me to testify virtually. I'm in an airport headed to my grad school residency, so testifying from the luggage section is a first for me. I'll keep it pretty brief. We're here to ask your support for Section 16 of the bill, as already well explained. I think as we all know, mortgage rates have gotten high and they've stayed high, and we're not seeing any corresponding drop in the price of homes. So with the majority of mortgage holders sitting on a rate somewhere below 5%, people aren't selling their home. Instead, when they need to make a change, they're investing in the home they live in now. So when that next baby arrives, instead of selling the starter home, moving down the street to the bigger house, we're seeing our clients expand the home they live in now. So this has led to an explosion in demand for home equity loans to close in seconds. The bill is already well explained, so I'll just add that this change will put Vermont in line with 47 other states in the District of Columbia, and giving families a little more flexibility in their financial strategy when they take out these loans. We worked closely with DFR in the language, and we're really appreciative of their time and expertise. We really believe this is a simple and common sense suite that's going to help folks in Vermont. I'm happy to answer any of your questions, and I'm very grateful for your time and the chance to testify.
Okay, committee, any questions? I don't see any. I think stamp of approval from DFR helps. So,
wonderful. Thank you all so much.
Okay, thank you for being patient. Yes.
Thank you.
Okay, committee, I think that is it.
That's all we're having.
For today, yes, that's a